You know, sometimes you gotta do what you gotta do. You sold your short too soon at 50. Yeah, I know we do that sometimes, but hey, you never go broke taking profits. We're gonna do some more future stuff too. I just wanted to at least get the foot in the door, showing everybody how it's done and that it can be done, and you don't have to be afraid of it, especially if you've never done it before. So that was my whole, purpose behind it, just to show people that it can be done and it is doable. You ain't got to be scared. So that was my motive behind that. All right, let me jump right in here and get started. All right, so we're going to do the overnight stuff first. All right. Well, thank you for tuning in to another edition of the Pre-Market Pulse Scan. Today is Thursday, May the 4th, 2017. The time is about 14 minutes after 7 a.m. Eastern Standard Time. My goal was to start at 7 o'clock sharp, but I had some technical issues. I had to start a few minutes late here. All right, looking at the overnight market, we do have some drastic changes from yesterday. Bonds, as you can see here at the top left-hand side of the screen, has fallen out of bed. We were flirting with 153. Now we're at 152.06, down 20-30 seconds. So the bond prices have seemed like they've chosen a direction. A close below 152 today would signal that another rate hike could be in the near future. All right, that's a big deal, because then bond prices could drop back down to 150 handle, somewhere in the 150, and that would give them the incentive to raise those rates again. And that's just how that goes. Looking at the bond futures, Dow futures. Dow futures right now is up 64 points at 20,943. The NASDAQ 100 is up 20 at 56.33 and a quarter. And looking at your E-mini S&P 500, up 7 and a quarter points at 23.90 and a half. Just follow my cursor to the left side of the screen. You can see what's going on here. Crude oil right now is down 57.5 cents at $47.25. It should be noted that in yesterday's live demonstration, I did tell you that if the free fall continues, that you are headed into that $46 handle, where you're only 25 cents away from yesterday's short, done live at 47.80. Looking at how the U.S. dollar fared, it closed about 99.12 yesterday, so we're getting lower and about to probably breach that 98 handle here soon. So that's definitely something to watch. Taking a look here at gold. Gold is down $14.50 at $12.34 even. And looking at silver, silver is off a nickel at $16.49 half. And natural gas is right now at $3.22. Again, staying in the 320 zone. As long as it stays in the 320s, 320 and above, that's the green zone. And that's what we need to build that support base to get us to 350. All right. Daily closes below 320 gets us into the red zone, where we could test the $3 handle and shows, possible topping and a significant pullback. I don't think that's going to happen. I think we're going to stay above that $3 watermark, and it's going to continue to build this base in the 320s to get us to 350. All right. You see GDXJ here. It's settled at $30.70. GDX, $21.51. OIH, which is your crude oil composite. It's your ETF that tracks this crude oil futures up here. You see it close at 27.35, and then here's your cubes, which tracks the NASDAQ futures right here, the NASDAQ 100. That's what this tracks, the QQQ. and one at 36.99. Poor dry ships, 74 cents closed yesterday. I tell you, this is getting interesting. All right, so what did the tea leaves say? What are the pulse waves talking about today? Let's take a look first at our rally alerts. I like to look at those first. Let's see here. Anything good on the board? We have a rally alert for crude oil futures. Got a rally alert. And I'm here to tell you that unless something happens here, this is not going to take place. This market needs to close above $48.19 today to put it into the downtrend. Now, I'm not saying it can't happen. I've seen crude oil move $10 in a trading session in one day, 10 bucks. And it's done it on multiple occasions. Therefore, that is not far-fetched. Just the way that it's trading now doesn't look likely. What looks likely is this scenario here. We're going to get up to the blue momentum line and set up the next short for the next leg down. That would be my guesstimation as of right now. We'll have to watch it and see how it plays out, but I think right now that's where the market's going to head. It's going to put in a short here. All right, so that's going to correspond to about $47.37 and change. We could get as high as $47.57.5 and change, which is here before falling back down again. But I think this scenario here is going to continue to play out right here. All right, and this little bounce off the lows is setting up for the next short. So we'll have to watch it, see how it plays out. We do have a rally alert here on tap, which means that there is something possibly brewing behind the scenes within the price action that cannot be seen with the naked eye. Therefore, what I would do is I would look to operate on the opposite side. I'd be looking for the potential long side of the trade because of the rally alert. It should be noted that the long-term trend is still in a bullish complexion. However, we have seen this acceleration to the downside, and we do have a bearish downtrend that does have the locked-in momentum as seen here on the chart, trading below the trend line here, momentum. All right, this is your momentum line. It's trading below it. That's bearish. All right, so that's what we are. All right, that's what we are. Can the acceleration to the downside pick up in oil? Yeah, it's locked in. You have a locked-in downtrend channel as seen here. And we do have momentum picking up. So can this 18 turn into a 70? You bet. So right now we got an 18 reading on crude oil. That's our reading. We got an 18. So that means that, you know, the complexion of the market has changed going out to the monthly picture. As far as the weekly makeup of this, yes, we have changed. If you take a look here at the cursor, here on the weekly, we have lost momentum on the weekly chart. And you can see here that the downtrend channel is intact. All right, and we've broken supports along the way. All right, now we're flirting with the top of the Kumo cloud. So that's going to put us in that $46 handle. Now we could get in here and lose downside acceleration and consolidate for a couple of weeks, and that could actually be about 3 to 4 weeks, because then we have a ramp here. All right, so all things being equal, momentum, because this is the jacked up market. Remember, I told you guys that this here is the gangster market. Crude oil is the most gangster market on the planet because it's run by the most gangster nation on the planet. All right, so that's why I chose that market for yesterday's live demonstration of trading. Because if you can trade the most gangster, most manipulated market on the planet, then you can trade anything. And that's what I wanted to demonstrate to everybody yesterday. If you can trade crude oil futures, you can trade anything. Crude oil is more manipulated than bonds, more manipulated than gold and silver combined. It is a gangster market with gangsters in the pit. And I mean that in every sense of the word. I've told the stories time and time again of the gangsterisms back when I worked on Wall Street. All right, moving along. Let's see what else of note we have here on our rally alerts. All right, this spills over to OIH right here. All right, you see it closed at 27.35 yesterday. All right, if you look at the weekly post-wave price triggers, we got a rally alert here. Yes, it's still locked in that downtrend. We're looking for possible support and a move up. Let me explain what that means. There are times when the OIH will pull away from the crude oil futures just because, and the reason why sometimes you get this detachment periodically is because of the contango in the crude oil futures. And so you got contango and backwardation, and the OIH is very sensitive to contract rollovers and situations like that. So sometimes you get this detachment and then it comes back into alignment. So let's take a look so you can see what I mean. Here is your crude oil futures on the daily. All right, keep a visual of this. And then I'm going to pull up the OIH. See how the OIH, it's the same chart, but you can see it's slightly different. So you got a little bit more green. All right, so sometimes there's little detachments, but overall it's the same chart. All right, it follows the crude oil to a T. All right, that's what it does. Okay. See, this one only has 2 greens. I think the OIH we just saw had like 4. All right, so it follows it. It does a pretty good job. It does a pretty good job. But I just wanted you to see that for yourself. Now you can see it. All right, let's see what else we got. Looking at the rally alerts here, let's see. We got definitely the oil sector. We got rare earths. And that's ticker UREE. It has a rally alert in it. So we'll watch that. And then we get down to, oh, Verizon has a rally alert. Verizon Communications. Same as oil a little bit here. You know, it's locked into a downtrend. It has been. And it's a possible bottoming out pattern. We'll have to watch it and see. Even if the market does close green today, closes up, it still has a little way to go to get above resistance. So just peep the peep your sheet. Look at your sheet for that, ticker symbol VZ. For those who are interested or followers of the Verizon, take a look at the post-wave price triggers on that, and you'll see what I mean. Let's see, moving along, we got some 411 positions. All right, for those of you unfamiliar with that, the ranking of 411 is securities that may be bottoming out or an oversold condition and showing signs of being ready to pop. All right, one of those today is JP Morgan and ABX. All right, ABX is Barrick Gold. So take a look at ABX, Barrick Gold. You'll notice that we have a trend ranking of 50 on that in the downtrend column. So the long-term chart is still in a bullish complexion. I'm sorry, a bearish complexion, and we have momentum locked in. So this is a play off support. It's a bounce off support, a bounce off the lows is what we're looking for. I don't know how significant that bounce will be, and you have to look at your pulse wave price triggers on that one. But I think it needs a little bit of time here. But it's just showing, it's giving you that signal now just that you need to start watching it. Let's see here. The euro. All right, we didn't talk about the euro. Let's pull that up. The euro has an interesting situation on it. So I'm going to pull up my favorite ticker on that one. I like using the micro futures. All right, and that's your M series if you're using Thinkorswim. All right, now this is your daily chart. You can see here we gapped up here, and that's because of contract rollover. When you see these little red dashes like this on the screen, that's your contract expiration and rollovers and stuff. So that's what we are. All right, so this has to be contended with at some point. Well, guess what? We have a buy signal on the EUO, which is the ultra short. All right, so this is calling for this to roll over. Even though it hasn't lost momentum yet and it's been moving sideways, all right, for going on 2 weeks now, it's showing signs of letting go. Let's take a look. Here you go. Close above your trend line resistance, trading below the Kumo cloud. Here's the bottom of the Kumo cloud here. So that means that you could get as high as around the 110.67 mark before hitting a major resistance and then being pushed lower. Now this is an inverse ramp going to the downside, all right? And that's pretty major. So you're looking at a possibility of retesting the lower end of 106. So you got a possible 300 pip move to test support. Break it and get into free fall, which means that the Fed may be getting ready to power up the dollar, to power it back up. All right. You will need to watch this to see how it plays. Let's look at the EUO, the inverse ETF for your euro. You see here? You know this gap has to be filled. We just finished talking about gaps. That gap has to be filled at some point. So you know at least your potential is $25.87 from the $25.36 when we closed it yesterday. All right, that's at minimum. Markets like to overshoot their targets. So we're looking at somewhere in the $26 handle, maybe 26, 20s or 30s, somewhere probably in between, somewhere around here maybe. All right, at least just on the retracement play alone. All right, even if the market's going to head back down again, I do see this retracing back up to here. So the EUO is something definitely to watch today. This one is definitely in play. 100% in play. All right, so definitely watch the EUO. That is something that's close to possibly breaking out today. All right, and that's the EUO entry point. And let's see here. Give me a second. I like to make my notes as I go along. As I do these pre-market pulse scans, I'm also putting together my shopping list. So if you hear me repeat something, that's because I'm really looking at it. All right, so just FYI. I know people say, so what are you doing today? Well, I just told you. All right, so the EUO is on the radar for this morning, and it will most likely trigger on the open if we don't get a gap. Let me just see here. Is this one of the ones that have the pre-market? Yep, already triggered. 25.52 in pre-market. So you guys know what to do. You see this gap here. I'm looking for our back and fill on the open, and then we take off. All right, so there you have it. All right, let me move along here, and we're going to get to everything else. Let's see. All right, setting up my screen here. Okay. All right, we got a question. It says, ABX entry is a red on the sheet. Closed yesterday at 1621. Do you enter on the post-wave price trigger, or is this a sell price as it is far removed from the entry price? With the 411 alert, is this one you put on your radar instead? All right, let me just go back over the ABX real quick. That's a good question. All right, yes, ABX is the entry price is far removed from the market. And yes, the stop runner mechanism of the system is showing that stops are going to be ran. So look for pullback on this one. Look for selling. Yes. So how do I answer this? Okay. Yes, you're going to want to look at selling this short because the trend is down. So you're going to keep selling. That's what you do. You keep selling, but you also prepare to stop and reverse and or get long at violation of said post-wave price trigger. Does that answer your question? That's how you do that. Yeah, I failed to mention that. My bad. Okay. Let's see. Moving on. Oh, UNG. Nat gas. Yeah, let's talk about this nat gas. Let's pull this up. Yeah, you guys don't laugh at me, okay? I just figured something out yesterday when we were doing the webinar. I didn't know that YouTube changed their policies or algorithms or what have you again, and they allowed me to upload the entire thing, the entire broadcast. I always thought it was strange because I saw other channels able to upload 6-hour video clips and stuff, you know, and I was like, man, I can only do like 20 minutes or 30 minutes. And they don't communicate very well, you know, and tell you things straight off the bat, like, hey, by the way, you know, wink, wink, hint, hint. We just, you know, gave you the ability to make longer videos. So that's why I was doing the pre-market pulse scans mainly because they were longer than 20 minutes, and I couldn't get all that on YouTube. So now I'm able to do it, and I'm able to make it so that everybody can see it who wants to see it. All right. So there you have it. That way you have the video with the audio. Now I will say this though, when we get into the question and answer session, you know, that's something separate because that's for the trading room. If you want to be a part of the trading room, then you know what you have to do. You have to come over to pulsewavetrading.com and you subscribe, and your subscription includes all of the goodies, and then you can stay for the rest of everything. All right. So here we go. Looking at UNG, first we're going to look at the natural gas futures, and as you can see, so it's a little red right now on the weekly. Let's pull up the daily real quick. You saw that beautiful ramp too. I know you saw that just now. We'll get back to that. All right, so it's maintaining barely the green on the screen. We have momentum at 322. It's sitting there right on that momentum line right now. Huge ramps coming up, all right, to help lift it. And we are trading above the Kumo clouds of death, which is great. So we're just hanging in. We've been waffling around here, consolidated for the last few days with no clear conviction. Now I'm hoping we get some. So we're still in this range. Technically speaking, we're still trading in the range of the initial breakout back on April the 26th of 2017. We've just been trading within that, all right? No real conviction to do anything else. But I believe we're at the potential of breaking out. Now, I know what you're going to say. What about this gap? When are we going to deal with this gap? We do need to deal with the gap. There's no ignoring that. So we probably will back and fill around here. So let's see, that's going to put us somewhere around the 3 teens, if you will. So that's possible. Let's see how that relates to the UNG. Oops, fat finger. All right. So here's UNG. All right, now you can see on the daily it gapped, but then it back and filled already. Now it's in the Kumo cloud of death. It really needs to get out of this Kumo cloud of death and follow along with the futures better. This is not doing a very good job of tracking the futures. But like I said before, on the flip side of things, I do believe that equities are better priced than the futures, meaning that traditionally speaking, they don't have um, the how do I say this? They don't have as much manipulation and stop run as futures. Futures tend to get a little wild. Futures don't really have gaps traditionally like equities do, but they don't run the stops. You know, it's not as much intraday manipulation as futures, if that makes any sense. So this UNG, you can make the argument that it could be showing smoother and more reality price situation than the futures does. And if that is the case, then we're in a downtrend channel within this Kumo cloud. Even though you're flatlined here, and technically speaking, you have a very weak bearish signal with no real conviction, but you're also in a potential post-wave positive situation. All this needs to do is close outside of the cloud. That's it. And right now it's just been elongated within the cloud. It's been in the cloud now for weeks. So all things being equal, you probably have another 2 weeks before we get out of the cloud. If it gets out of the cloud and closes here, it's in the bottom of the cloud, and then we could fall. If it closes on the outside of the cloud, then we have the ability to run. So it's just a flat line situation with a lot of weakness in it. So we'll have to watch. I don't know if it's ready to bounce from here or not. I don't know if we're building a base. All right, we'll have to look for the price action and see what's going on. But chances are, let's take a look at, do we have any pre-market action here? All right, pre-market action is pretty flat, 745. So this is definitely one to watch too. Looking at the big picture on the weekly chart, it's below the Kumo cloud. We need to stay above 747 to build some momentum, and then we need to close above 761, which is above this trend line resistance. That puts you really close at a strong ceiling right here, strong resistance. But if we can get enough power behind it and break through it, then we can get a nice close above 813. We're above the Kumo cloud, and then we can run. We can consolidate, whiffle around. Don't really have any real ramps here, but we got some hints at momentum going out to the $9 range. So it's possible it could just drift toward the $9 over time. And because this is a slow moving type of an equity, this would be a commitment of maybe 1.5 to 2 months. You know what I mean? So I don't know. I stopped thinking a long time ago. I just go with the system. Yeah, UNG is a 1X ETF. That is correct. It's not your 3X. All right, let's see what else I want to talk about on here. Let's switch over to our crash alerts now. See what we got. All right. What of note do we need to deal with here? Oh, Knick Knack Paddywhack has a crash alert. Oh, is Knick Knack not feeling well? Let's see what Knack is doing. All right, as you can see, we had some price inflection points here, and we had one here, which was trying to lead to here, and then it gave it all back. And now we're just waffling around here. Now, we do have these ramps coming up. This should help lift the price action back above 217. This is a slow mover too. You do get situations like this, but that's rare. Look at the breadth of these bars and the breadth of these bars. That's the real story. These two anomalies are not. All right, so this is what we look like. All right, on the knick-knack paddywhack. I believe once it gets going, it's going to be pretty powerful. But right now, we do have a crash alert to contend with. Now, you know my rules on trading stocks below $5. We do not sell them short. It's not worth it. If you get short here at yesterday's close at 151, the most you can make if it goes to zero is $1.51. What is the odds of stocks going to zero? Even bad stocks sometimes do not go to zero. They may trade for pennies sometimes, but they don't go to zero. That's going to zero means the company's out of business. It's done. It's gone. Okay. So there's no money on the table to sell short, which means you will have to watch this, pay attention, and watch and wait for it to pulse wave before you get in it. And if you look at today's entry price versus the market, you see that it does need to pulse wave. And it's not really anywhere near doing that yet. Apple Computer has a crash alert on it. It has a rating of 70, so it's in a strong, powerful uptrend. But we had a crash alert, which means there's something freaky going on in the price action that the system is picking up, and so we need to watch it. Yes, the price inflection point of intraday support is far removed from the market, so you need to watch it. So if you are long Apple, you would use this opportunity to tighten up your stops so that you can lock in some profit and not become a victim of being a pig. Remember, pigs get slaughtered. All right, what else we got of note? eBay has a crash alert on it. Facebook has a crash alert. Facebook has been a powerful juggernaut within the NASDAQ. Let's pull that up. And as you can see, it's just been powerful. System's picking up some abnormalities, which means that this one probably will start to pull back and correct, get close to maybe the 146, 145 level. All right, so you're looking at a possible $8 potential. So looking like $8 on the table for pullback here. I wouldn't necessarily fall in love with the pullback. If it were to pull back any more significant than that, that would already give you a sell signal in the NASDAQ 100 futures. Speaking of which, did I just see that? Yes, the NASDAQ has a crash alert. NASDAQ futures has a crash alert. Let's pull that up. Whoops, fat finger again. All right, here's your NASDAQ. Notice how your Facebook is moving lockstep with the NASDAQ index itself. This one has a high probability of getting filled. All right, the NASDAQ 100 futures has already pulled back, even though it's up 19 points. It's already pulled back. So you're going to want to watch this one. If it takes out, if the futures takes out this overnight support low, the market is going to pull back, and it may do so rather substantially. Remember, markets like to do things without warning. All right, while everybody's thinking one way, that's when the markets move and do something else. So trade lightly on that one. Go with your eyes open. Tesla also has a crash alert. Pretty much everything in the tech space has a possible crash alert for today. So you need to watch the pulse wave price triggers for that signal to get out of longs and to get short. Let's see what else we got of note on here. Yep, Netflix, Microsoft, all of that. Let's see what else we got. Anything of note? Got quite a few things here. Let's see. Visa card has a crash alert as well. All right, as far as overboughtness is concerned and those alerts, let's take a look at that. All right, as far as overboughtness goes, the Aussie, the Kiwi, which is the New Zealand dollar, let's see, XIV, and of course Amazon, Google. All right, these are all showing signs of overboughtness. Also the S&P 500, all right, futures, the E-mini S&P 500. Let's see, looking at what we are. All right, this one also has touched on the intraday support and the overnight. So anything taking out these overnight lows in the stock index futures is going to be bearish for the day. All right. One last thing of note here on the equity side of things is your XIV. As goes XIV, goes the rest of the market. Just hit a new high yesterday at 78.62. All right, 78.62. And in the pre-market, we're at 77.20. All right, so it's already doing it. Look out for your post-wave price trigger reversals to the downside on this one. If this one triggers to the downside, then that means the top, short-term top in the market has been reached, and you have to act accordingly. All right, we're gonna finish this segment with good old gold, silver, and all that good stuff. So let's look at gold now. Looks like the banks continue to attack. Here is the weekly bar, here is your hourly bar, here is your 4-hour bar, and here is the weekly here on the corner. All right, so I'll make this one the daily, and let's take a look-see. All right, notice how it's respecting the ramp as I indicated to you before. This bar wasn't here. All we had was this bar, and it wasn't as elongated to the downside. It was more so up here, and I told you what we're looking at. So right now it's looking like it's going to respect that, travel along these lines, get it to your ramps, and try to recover from there. That's what this is looking like. So we have to watch and see. It could still crash below, but I don't think that's going to happen. Never know. I've been wrong before. But this is what we're looking like. Over here in the corner, the weekly, you see supports have been taken out, and now it's in a free fall state of which you could pull back to toward the bottom of the Kuma cloud to lower 1200s. All right, so that'll put us into 12 teens somewhere, or somewhere about that. We do have a 40 reading under our positive momentum. So with that being said, you're going to want to study that to see how we move today. That could be setting up for a intraday rally today. So be mindful of that. Even though we don't have an official 411 or 911 rally alert, we do have a 40. So you need to look and see if that is a positive swing VIX that's going to manifest intraday or not. I doubt it because our post-wave price trigger is settled on the post-wave side, which is far removed from the market. So no chance of that happening. But this is telling you too that you want to watch it because this may be a situation where we could be bottoming out. Now I know that support has already been broken, so a triggered short to add on to position is already in existence. So I'm thinking that what's going to end up happening is the positive swing VIX is going to set up for the next leg down. So be mindful of that. And you can see we're already trading at the blue momentum trend line here. Haven't gotten back quite up to it on this one, but this is definitely setting up for the possibility of another leg down. All right, so we got to watch that. Silver is a similar situation with the positive swing VIX setting, and let me just pull that one up. All right, here we are right here. This in no means a bottoming situation. It just means that the market could be setting up for the next leg down. So even green on the screen, if we close like this on the day, positive, it's just setting up for the possible next leg down. So you need to be mindful of that, all right? This is not a buy signal. And this one has, let's see. This is not triggered the sell short yet. This is not triggered. All right, your post-wave price triggered for your intraday support is not triggered yet. So watch that one. If it does, you already know what's going to happen. You know what this leads. And it should be noted that the stop runner is suggesting that stops will be ran in the gold and the silver today. All right, and that's found under the momentum price trigger or the MOM PT column on the post-wave sheet. All right, and let's see here, GDXJ, looking at your miners. As you can see, closed at the low of the session, so you are definitely in free fall here. And all things being equal, you are locked in on the downside with a positive swing VIX, possibly setting up the next leg down. All right, pre-market 30.59. So you're already lower on this one. And yes, the support, intraday support, has already been violated. So this has already triggered a short. I wish I had better news, but I do not when it comes to the mining sector. So that being said, remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give absolutely nothing back. All right. Now let's turn over to our trading room section. 06, down 20, 30 seconds. So the bond prices have seemed like they've chosen a direction. A close below 152 today would signal that another rate hike could be in the near future. All right, that's a big deal, because then bond prices could drop back down to 150 handle, somewhere in the 150, and that would give them the incentive to raise those rates again. And that's just how that goes. Looking at the bond futures, Dow futures. Dow futures right now is up 64 points at 20,943. The NASDAQ 100 is up 20 at 5633 and a quarter. And looking at your E-mini S&P 500, up 7 1/4 points at 2390 and a half. Just follow my cursor to the left side of the screen. You can see what's going on here. Crude oil right now is down 57.5 cents at $47.25. It should be noted that in yesterday's live demonstration, I did tell you that if the free fall continues, that you are headed into that $46 handle, where you're only 25 cents away from yesterday's short, done live at 47.80. Looking at how the U.S. dollar fared, it closed about 99.12 yesterday, so we're getting lower and about to probably breach that 98 handle here soon. So that's definitely something to watch. Taking a look here at gold. Gold is down $14.50 at $12.34 even. And looking at silver, silver is off a nickel at 16.49 half, and natural gas is right now at 322. Again, staying in the 320 zone. As long as it stays in the 320s, 320 and above, that's the green zone. And that's what we need to build that support base to get us to 350. All right. Daily closes below 320 gets us into the red zone where we could test the $3 handle and shows, possible topping and a significant pullback. I don't think that's going to happen. I think we're going to stay above that $3 watermark, and it's going to continue to build this base in the 320s to get us to 350. All right. You see GDXJ here. It's settled at $30.70. GDX, $21.51. OIH, which is your crude oil composite. It's your ETF that tracks this crude oil futures up here. You see it close at 27.35, and then here's your cubes, which tracks the NASDAQ futures right here, the NASDAQ 100. That's what this tracks, the QQQ, and 136.99. Poor dry ships, 74 cents closed yesterday. I tell you, this is getting interesting. All right, so what did the tea leaves say? What are the pulse waves talking about today? Let's take a look first at our rally alerts. I like to look at those first. Let's see here. Anything good on the board? We have a rally alert for crude oil futures. Got a rally alert. And I'm here to tell you that unless something happens here, this is not going to take place. This market needs to close above $48.19 today to put it into the downtrend. Now, I'm not saying it can't happen. I've seen crude oil move $10 in a trading session in one day, 10 bucks. And it's done it on multiple occasions. Therefore, that is not far-fetched. Just the way that it's trading now doesn't look likely. What looks likely is this scenario here. They're going to get up to the blue momentum line and set up the next short for the next leg down. That would be my guesstimation as of right now. We'll have to watch it and see how it plays out, but I think right now that's where the market's going to head. It's going to put in a short here. All right, so that's going to correspond to about $47.37 and change. We could get as high as $47.57.5 and change, which is here before falling back down again. But I think this scenario here is going to continue to play out right here. All right, and this little bounce off the lows is setting up for the next short. So we'll have to watch it, see how it plays out. We do have a rally alert here on tap, which means that there is something possibly brewing behind the scenes within the price action that cannot be seen with the naked eye. Therefore, what I would do is I would look to operate on the opposite side. I'll be looking for the potential long side of the trade because of the rally alert. It should be noted that the long-term trend is still in a bullish complexion. However, we have seen this acceleration to the downside, and we do have a bearish downtrend that does have the locked-in momentum as seen here on the chart. Trading below the trend line here, momentum. All right, this is your momentum line. It's trading below it. That's bearish. All right, so that's where we are. All right, that's where we are. Can the acceleration to the downside pick up in oil? Yeah, it's locked in. You have a locked-in downtrend channel as seen here, and we do have momentum picking up. So can this 18 turn into a 70? You bet. So right now we got an 18 reading on crude oil. That's our reading. We got an 18. You know, sometimes you got to do what you got to do. You sold your short too soon at 50? Yeah, I know. We do that sometimes. But hey, you never go broke taking profits. We're going to do some more future stuff too. I just wanted to at least get the foot in the door, showing everybody how it's done and that it can be done, and you don't have to be afraid of it, especially if you've never done it before. So that was my whole, purpose behind it, just to show people that it can be done and it is doable. You ain't got to be scared. So that was my motive behind that. All right, let me jump right in here and get started. All right, so we're going to do the overnight stuff first. All right. Well, thank you for tuning in to another edition of the Pre-Market Pulse Scan. Today is Thursday, May the 4th, 2017. The time is about 14 minutes after 7 a.m. Eastern Standard Time. My goal was to start at 7 o'clock sharp, but I had some technical issues and had to start a few minutes late here. All right, looking at the overnight market, we do have some drastic changes from yesterday. Bonds, as you can see here at the top left-hand side of the screen, has fallen out of bed. We were flirting with 153. Now we're at 152